There are bills arriving in mailboxes across America right now that millions of seniors are paying in full every single month, even though they don't have to. Not because the bills are fake and not because there's some trick, but because there are programs, exemptions, and appeal forms that exist specifically to reduce or eliminate these bills for people over 65. And the companies and agencies collecting the money have no obligation to tell you about them. They just cash the check. Today, I'm going to walk you through 5 bills that seniors are quietly overpaying, what each one is actually costing you per year, and the exact steps to stop paying more than you owe. Some of these can be fixed with a single phone call. Before we get into bill number 1, if you're not subscribed to this channel, do that right now and turn on the bell. Here's why it genuinely matters. The programs I'm about to describe change constantly. Income limits get adjusted, deadlines move, new exemptions get created, and nobody sends you a letter when it happens. What I do on this channel is track those changes and break them down into plain language before the deadlines pass. The people who are subscribed find out in time. The ones who aren't tend to find out after the money is already gone. Hit subscribe, turn on the bell, and let's get into it. Bill number 1, property taxes at the full rate. This is the biggest one, so listen carefully. The AARP Foundation estimates that more than 9.3 million older Americans on limited incomes qualify for property tax relief, and only about 8% of them actually apply. Roughly 9 out of 10 eligible seniors are paying full price on a bill they could legally reduce. The average homeowner pays over $4,200 a year in property taxes, and nearly every state offers some form of senior relief. But here's the catch. Your county does not automatically apply the exemption when you turn 65. You have to discover the program, confirm you qualify, and file the application yourself. The assessor's office will happily keep collecting the full amount forever if you never ask. Let me give you a sense of what's on the table. In Texas, homeowners 65 and older get an extra exemption on school district taxes, and those school taxes get frozen at the amount you paid the year you turn 65. Even if your home value doubles, that portion of the bill cannot go up. In Florida, qualifying seniors can stack an additional $50,000 exemption on top of the standard homestead exemption. Colorado gives qualifying seniors a 50% exemption on the first $200,000 of home value. And in Washington state, the senior program starts at age 61, not 65, so some of you qualify years earlier than you think. Depending on your state, a senior exemption can mean $1,200 to $4,800 back in your pocket every single year. Over a 20-year retirement, that's up to $96,000 that either stays in your household or goes to the county. Here's what to do. Go to your county assessor's website and search for the words senior exemption. If the website is confusing, call the office and ask one direct question. What property tax relief am I eligible for as a homeowner over 65? And what is the application deadline? If you want help, the AARP Foundation runs a free program called Property Tax Aid that walks you through exactly which programs you qualify for. And file as soon as you're eligible, because in most states, the exemption is not retroactive. Every year you wait is a year of savings gone for good. Bill number 2, a Medicare premium based on income you no longer earn. This one is called IRMAA. The income-related monthly adjustment amount, and it is quietly draining money from retirees who have no idea they can fight it. If your income crosses certain thresholds, Medicare adds a surcharge on top of your standard Part B and Part D premiums. In 2026, that surcharge on Part B alone ranges from about $81 extra per month up to $487 extra per month, with more added on your drug coverage. For a married couple in the higher brackets, IRMA can add over $10,000 a year to their Medicare costs. Now here's the part that catches people. Medicare doesn't look at what you earn today, it looks at your tax return from 2 years ago. So your 2026 premium is based on your 2024 income. If you sold a house in 2024, did a Roth conversion, or worked your final full year before retiring, Medicare sees that as your income and charges you accordingly, even though what you actually live on today might be a fraction of that number. The fix exists, and almost nobody uses it. It's Form SSA 44, and it's built for exactly this situation. If your income dropped because of a life-changing event, and retirement itself counts as one, along with the death of a spouse, divorce, or loss of a pension, you can ask Social Security to use your current, lower income instead of the old number. For some retirees, a successful appeal is worth $1,700 to $9,500 in a single year, and double that for a couple where both spouses are on Medicare. If you're paying more than the standard Part B premium right now, and your income has dropped since 2024, stop what you're doing and look up Form SSA 44 today. Bill number 3. Last year's drug plan at this year's prices. Here's an uncomfortable truth about Medicare Part D. The plan that was the cheapest option for you in 2025 may be one of the most expensive options for you in 2026, and the insurance company is counting on you not noticing. Part D plans change every single year. Premiums, deductibles, copays, pharmacy networks, and most importantly, the list of covered medications. A drug that cost you $10 a month last year can quietly move to a different tier and cost you $95 this year. Same pill, same pharmacy, same you. The insurance companies send you a notice of these changes every fall, and most people throw it away with the junk mail. Then in January, the new prices kick in and they wonder why the pharmacy bill went up. The retirees who shop around routinely find savings of hundreds of dollars a year, sometimes far more if they take multiple medications. The fix costs you nothing but an hour. Every year between October 15th and December 7th, Medicare open enrollment lets you switch plans freely. Go to Medicare.gov, use the Plan Finder tool, enter your medications with doses, and let it rank every plan in your area by your real total cost, not the premium, the total, including your specific prescriptions. Write that date down, October 15th. The retirees who check every year keep their costs down. The ones who set it and forget it are the ones funding the difference. Bill number 4. Life insurance you may no longer need. This one requires some honesty. Here's the question nobody asks. What was the policy for? For most people, it was there to replace your income so your spouse could pay the mortgage and your kids could eat if something happened to you. At 45, with a mortgage and children at home, that premium was money well spent. But if you're 70, the house is paid off, the kids have their own careers, and your spouse would inherit your savings and receive survivor benefits anyway, ask yourself what that monthly premium is still protecting. Many seniors pay hundreds of dollars a month out of habit and fear for coverage designed to solve a problem they no longer have. Now, this is not universal advice. Some policies have real cash value. Some are part of an estate plan. And canceling the wrong policy is a mistake you cannot undo. So the action step is not cancel your insurance. It's this. Pull out the policy, find the annual premium, and ask one question. If this money went into savings instead, would my family be better off? If you're not sure, have a fee-only advisor look at it, someone who earns nothing from selling you a replacement. Just don't keep paying for another decade without ever asking the question. Bill number 5. Full-price cable and a phone plan built for someone else. This is the smallest bill on the list, and that's exactly why it survives. Traditional cable packages easily run $100 to $150 a month. That's up to $1,800 a year, often for hundreds of channels where you actually watch about 6. One streaming service plus a simple antenna for free over-the-air local channels can cut that bill by around $1,200 a year. Phone plans are the same story. Many retirees are still on big, unlimited data plans from their working years, when a discount carrier or a senior plan would cut the bill by $40 to $70 a month for the same calls and texts. And while you're at it, scan your bank statement for small recurring charges, forgotten subscriptions, monthly account fees your bank would waive if you asked, protection plans on devices you no longer own. Individually, these are small. Together, they're often $2,000 a year, leaving your account on autopilot. So here's the summary. Call your county assessor and ask about your senior property tax exemption, because 9 out of 10 eligible seniors never do. If your income has dropped since 2024 and you're paying more than the standard Medicare premium, file Form SSA 44. Every October, run your medications through the Medicare Plan Finder before enrollment closes December 7th. Pull out your life insurance policy and honestly ask what it's still protecting. And spend one afternoon on cable, phone, and the small recurring charges on your bank statement. None of this requires an advisor or a fee. It requires knowing the programs exist. And now you do. Subscribe, share this with someone who's paying full price on any of these, and I'll see you in the next one.